Hello and welcome to this new episode of Bootstrapping Your Dreams Show. I'm your host Manoj Agarwal, and today we'll be talking with Thealzel Lee. So Thealzel is a distinguished entrepreneur, angel investor, and a strategic advisor who plays a pivotal role in shaping the future of startups and technology ventures. As the founder and president of eFund and the vice president of operations at the Vantec Angel Network, Vancouver, Thealzel is a cornerstone in the local Vancouver startup ecosystem, specializing in early stage technology investments, particularly in life sciences and deep tech industries. Thealzel expertly manages the monthly Vancouver Angel Technology Network, known as Vantec, and oversees the Vancouver chapter of the Currency Forum for the Northwest region. Our commitment extends to serving on committees with Canada's National Angel Capital Organization and the US Angel Capital Association, influencing angel investment strategies across North America. In addition to her roles at eFund and Vantec, Thealzel is a co-founder and director of Nelsa Investments, eFund, and Timia Capital, all of which are platforms through which she facilitates both equity and non-equity investments to nurture numerous entrepreneurs and ventures. Her experience as a public and private board director, coupled with her deep expertise in technology, commercialization, and business strategy development, makes her a valuable advisor and leader in the entrepreneurial community. Welcome, Talzel.
Hi, thank you for having me, Manoj.
Of course. So you've had such a big, impactful career in angel investing, in startups, in entrepreneurs, in the entrepreneurship arenas. But let's get to know you a little bit better. Can you walk us through your journey? How did you get started in investing? How did you get attracted to entrepreneurship?
Well, I was an entrepreneur myself. I needed uh, flexible hours. I mean, I was a single parent, and it was very important that I be able to have that work-life balance. And through that, I got to know some amazing people who started their own ventures. And I consulted with them, provided strategic advice, and eventually I helped them with their fundraising. And so that's how I got onto the investor side. So I was an entrepreneur just like them, and I'm also an investor. And
I
that
see.
happens quite a lot in the early stage world.
Yes, yes, of course. Now, let us talk about investing. So, first of all, there are lots of different types of investments, and people sometimes don't understand the difference between what is an angel investor, what is a venture capitalist, what is, you know, dilutive equity, non-diluted equity. So, can you help us sort of demystify a little bit of this whole investor landscape?
Well, I'll try my best because it can be very confusing for both investors and entrepreneurs alike. But
Yes.
if everybody can imagine a continuum, so at one end of the continuum is your idea of a startup, and at the other continuum is a well-established company with markets selling products in markets worldwide. So let's start at the part where it's very idea focused. You haven't quite started the business yet. There's quite a lot of help in the province of British Columbia and in Canada in general for non dilutive financing. What does that mean? It means funding that doesn't take a piece of your equity or ownership in your company. And they can come from a lot of government grants will help you out. Also, you can lean on family and friends, and they may take a piece of ownership in your company. They may not. It depends on your relationship with them. As your company matures, then we come into the realm of formal funding beyond government funding that an entrepreneur can access. And these are usually the first professional investors that they will meet in their journey to becoming a well-established company. These are called angel investors. Angel investors are investors who invest their own money out of pocket. usually for equity, sometimes loan, but mostly for equity. And the strategies of investing strategies of these angel investors, because they're investing their own money, are as individual as the individual angel investors themselves. They may invest on their own. More likely, they invest in a small group or syndicate, and then occasionally they'll invest through a fund like eFund. In British Columbia, I'm a founder and director of eFund, which invests in British Columbia based companies.
Mm-hmm.
I'm also general partner of Archangel Phoenix Fire Fund, which is a national fund based in Ontario that invests in Canadian entrepreneurs. Of course, as a company matures, not just equity, but especially if they start generating revenues, they have access to financing, maybe at a higher rate because they may not have a history or positive cash flow. But as they mature, that's another source of funding. And venture capital, that is institutional funding. That is that they venture capitalists don't invest their own money, but they take money from pension funds, from trade unions, from other institutions, and they pool it together and they have an investment thesis where they will invest in companies. And then beyond that, well, there's many different options, of course, when your company's mature and thriving in the marketplace.
Mhm. Well, thank you so much for that. Now, obviously, this podcast is called "Bootstrapping Your Dreams," and I've been part of many startups where a lot of people built their startup bootstrapping without taking any external investments. And also, I've been part of multiple startups where we raise money. So, can you share with us, like, maybe what are some of the pros and cons of accepting money from investors for entrepreneurs?
Okay, well, I'm going to show my bias here because I'm a big fan of bootstrapping.
Mhm.
So
Awesome.
So I don't believe you work so hard at building your company. It I would try not to take dilutive financing, which is what accepting equity investments from investors would be, to non-dilutive. So try to qualify for as many government grants as you can. Get it to a point where you are developing your business such that you're selling product or a service and that the revenues fund your company. You gradually grow your company that way.
Mhm.
Mind you, most businesses that are started don't need outside equity investments. The ones that do require equity investments because they have large capital infrastructure to finance. These would be companies in the life sciences and medical technology. Again, here's my bias because I was trained as a scientist. I was trained to study biochemistry. So I have a fondness for life sciences and med tech companies. Those kind of companies require a lot of um, capital infusion to build their infrastructure. Other sectors include ag tech, clean tech, uh, some of the Internet of Things, where there's a lot of infrastructure requirements before a product can actually be developed and sold in the marketplace.
Yeah, yeah. That's so helpful for a lot of people because I think there is a trend now that people assume that you need to raise money as a first step of starting a company. And also I see a lot of trends in the media where a lot of attention is given to a company when they raise money. Like, it's a lot of, there's a lot of celebration around raising money, but there's not a lot of emphasis on profitability or revenue generation. Do you see some these kind of trends from your vantage point as well?
Definitely. I think there's not enough spotlight on the what I call unsung heroes. These are
Mhm.
people who start their businesses, have a product or service that they can sell. If they can, they should not take outside money to dilute their ownership position because they can finance their business through their customers. And that's the best way of financing. Now,
Yeah.
there are some businesses that can't uh, follow that business model. I med tech, ag tech, energy store, clean tech. There's a lot of companies that require that um, large amount of funding, and that's what gets the headlines because of the size of the investments. We hear billions of dollars being spent just to bring a single drug to market. That
Mhm.
catches headlines, but
Mhm.
nobody ever talks about a service that's needed and is actually sold in the marketplace and serves the local community well.
Yeah, yeah, absolutely. And the other aspect is, many successful startups, as they grow, they do raise money, they do find investors. But I've found, like, when things are going good, they are going, it's all good for everyone involved. But as soon as things go bad, like, they have a bad quarter, or sales are not as good as the investors thought, there are a lot of conflicts that start to occur. Like, have you seen that dynamic? And what can you say to the entrepreneurs? Like, how do you maintain those relationships after you have found your investors?
It's like a marriage, Manoj.
Mm.
Guaranteed there will be some tough times.
Yes, yes, yes.
And so when you accept equity investors, like angel investors who take ownership in your company, it's very important that your investors share your values because that's
Mm-hmm.
what's just like a marriage. That's what's
Yes.
going to hold you together and be able to work through the tough times.
Mm-hmm.
Taking money from the wrong people, it's like a bad marriage.
Yes, yes, yes.
Things go badly, and they will, because that's the nature of a startup
Yes.
venture. They will go badly, but if your investing partners share the same values, share the same vision, support you, you will be able to ride through those tough times.
Yes.
Guaranteed, there will be tough times.
Yeah. No, that's a very good point. And I see it exactly the same way as you described it. Like, it's like a marriage, and you really need to be very, very I guess vigilant about who you accept money from. But let's not paint a lot of, sort of doom and gloom image. Let's also talk about the benefits, because I see a lot of benefits in working with investors, because you get access to their network, a lot of their experience, their wisdom. So can you share with us what are some of the advantages of working with the mature investors?
Well, just as you described, you have access to their Rolodex of contacts. But more importantly than that, if it's a knowledgeable investor in your business, they can help you network in your marketplace and introduce you to larger and strategic investors that can really quite propel you in your business. If we take the example of agriculture, depending on which sector of agriculture you're in, your investors could have connections. They might be um, retired executives of a large agricultural firm, and the wisdom that they bring and experience that they bring from their experience of working in that sector can really benefit a startup entrepreneur, and
Yeah.
also help form strategic partnerships. That's called smart money.
Yes, yes, absolutely. Now, over the years, I'm sure you've made a lot of investments, worked with a lot of entrepreneurs. Like, do you have any memorable success stories that you may want to share, or anything that comes to mind?
Well, there are some success stories. There was one company that um, started off with high hopes. It ran into some problems, as many companies do. It's not
Mhm.
uncommon, such that it had to have a down round, which meant that they were selling shares at prices lower than
Huh?
what they were selling to the earlier investors. Now, the earlier investors were not happy about the down round, but they were supportive. This is where uh, it's so important to have investors that share the value. Some of them bought into the down round, some of them did not, but they supported the entrepreneur. 7 years after that, so altogether 15 years, it finally was bought by a very large corporation, and that was in their market space,
Hmm.
and
Hmm.
gave all the investors a very healthy return on investments. So there were many, many happy investors, and even the earlier ones who had to live through that down round, but then they came out the other side.
Yeah, that's amazing story. It also reflects, as you said, like it also reflects on the experience of the investors because, I mean, if they have made more investments, they have gone through the ups and downs of business, and they recognize the potential. So I'm guessing, it has a lot to do with their foresight as well. Yes.
Yeah, angel investors, when they because they so invest so early in the game, they need to have that long-term vision, because
Mhm.
it's like a marriage, as I said before. It's long term. There will be some rough times, and you need to support each other.
Yeah, awesome. And in your opinion or your observation, are there any common traits that successful entrepreneurs possess versus those who do not make it?
I would say it's persistence in the vision. That their vision doesn't change. Their mission to achieve that vision doesn't change, but their strategies or tactics may
Mhm.
change according to market conditions. This is
Mhm.
what I mean about the investors and the entrepreneurs. They need to share that common vision and believe in the mission to help that entrepreneur succeed, and help them pivot to different strategies to achieve that same end goal.
Mhm.
So
Mhm.
always keeping an eye on the prize and trying different strategies, the willingness to try the different strategies, the willingness not just of the entrepreneur, but also the investors that support them
Yeah.
to achieve that vision.
Yeah. Well, that's a great point. So, and it brings up a little bit another question for me. Like, like for example, you mentioned that you focus a lot on health sciences and some deep tech. And I see there are a lot of funds focusing on a specific industry or specific vertical. And when I talk to a lot of entrepreneurs, they don't seem to maybe distinguish, okay, where should they go to raise money. They just say, oh, I need to raise money and I'll talk to anyone. But as you mentioned, the mission and vision needs to be aligned. Like, so I'm guessing if you get a little bit more focused and talk to people who are focused on your industry, your vertical, you'll have a better chance of success. Is that correct?
Absolutely right. And understand the motivation of the person that's across from you as to why they would want to fund you. You have to give them a reason for why they should fund you. If you're talking to someone in a completely different sector, you're wasting your time and their time because they
Mhm.
don't understand your marketplace, and you don't understand what they need to succeed in their business. So it
Yeah, yeah,
always needs to be a win-win. What's their motivation, and what can you do, or what can you offer that will make it a win for you and a win for them?
yeah, yeah. um and so that's obviously, it's a very important point, and a lot of people, I think, it is a common mistake in my observation, entrepreneurs make. They don't niche down their focus on investors and nor on the customer side. Like when I talk to them, many of them say, oh, my product or service is applicable to everyone should be buying it. And same goes on the investment side. So is that like, in your opinion, what should be the right approach, even when they're looking to build revenue, even when they're looking to get their first customers? What is the right way of growing the company, bootstrapping it, generating revenue?
Well, I'll talk about a sector that I know more about, or my favorite is life sciences and drug development, med tech development.
Yes, yes.
That kind of sector requires a lot of investment, equity investment from angel investors and venture investments and beyond.
Hmm.
And if you're a graduate student and you invented a molecule that's going to be very key in the field of neuroscience, you don't approach an investor that's focused on pediatric cancer.
Hmm. Yes, yes,
It's
yes.
completely different.
Hmm. Hmm.
Now, yes, they're both healthcare, they're both health sciences, they're both, but it's completely different fields. Likewise, if you're uh, having a product for women's fashion, you would not talk to an investor that only invests in men's shoes.
Yes,
They're
yes, yes.
both fashion, but different sectors. So again, I'll go back to what I said earlier, Manoj. Understand the motivation of the other side
Hmm. Hmm.
and see what you can do to provide a win for them and a win for yourself.
Yeah, yeah. So that implies, as an investor, as a fund, you must be getting a lot of inbound calls, inquiries. Like, do you do you find it a little bit challenging to sort of filter it out, or how does the investment community deal with so many people coming at them asking for money, even though they may not be the right match, maybe they haven't done the right research. Like, has is that a challenge in your industry?
Oh, definitely, because we get all manners of entrepreneurs. As they see money, and that's all they see. They don't take the time to understand the motivation of her or how the um, how the process works.
Hmm.
I think my venture capital friends who actually manage institutional money on behalf of their limited partners who are institutions, they have a thesis, and they say that they're quite succinct when they say, no, we only invest in AI as it is applied in manufacturing. So that's
Hmm.
very specific. And you
Hmm.
look at you get a clue by looking at their portfolio. What have they invested in the past? If you
Hmm.
don't see your product or your company fitting into their portfolio, then very likely they won't invest in you.
Yeah, yeah, yeah. And on from the investor side, is that not like a little bit of a risk? Because from what I understand about investment, it's good to diversify your portfolio, isn't it? So can you speak to that a little bit? Like, if the investors are taking bets on very similar industries, like, how do they protect their risk?
Okay, well, with venture capital, they are managing on behalf of their LPs, and they have an investment thesis that they need to stick to. Very unlikely that that is the only fund that they're managing. So they
Okay.
probably diverse their risk in other types of investments. In eFund, it's an angel investment. It's a group of angel investors that have come together. If you look at our portfolio, it's very agnostic. Okay, then it
Okay.
sounds like maybe your company might have a chance. Well, take a closer look.
Mhm.
There's it may be agnostic, and look at the way we run our fund. Venture capitalists run their funds certain ways. Angel investors run their funds a certain way. eFund is an angel investment fund, but it runs its fund differently than all the other angel investment funds. The way
Mhm.
we run is that because we are regional, we're based in British Columbia, we only invest in eligible business corporations based in the province of British Columbia.
Mhm.
That's our
Mhm.
first gate.
Yes, yes,
Then
yes.
to get to the next gate, you have to look at all the different teams. We notice that we have a strong ag tech. There are certain teams of people within eFund look at only ag tech deals. And there's another team that only looks at med tech deals. And yet another team that only looks at energy storage and clean tech deals.
Mhm.
And we
Mhm.
have these individual teams that operate under the umbrella of eFund. So,
Mhm.
yes, entrepreneurs do need to take some time to understand
Mhm.
how the other side works.
Yeah,
And so,
absolutely, absolutely. And you mentioned AI now. Obviously, that's one area that I'm passionate about. I run a AI company. So, what are some of the implications of AI in in investments in entrepreneurship that you see? I mean, it's a big question, but what do you see the future because of AI? How do you think the landscape will change?
oh, I see AI, and so do my fellow investors, as a huge potential to do societal good, big global impact. And then you need to parse it down. How is AI going to give this impact? And I mentioned the example of AI being used in manufacturing. So,
Yeah.
how's it going to affect the manufacturing sector? In EFUN, we invested in a company that uses AI to predict the molecular structure of drugs. That's drug development. That's
Mhm.
the application. So AI is a very powerful tool, and we see a lot of potential for AI. It depends on which sector and how it's used to benefit that sector.
Yeah, I think it is a very impactful technology. We have a long way to go, but I think it is going to disrupt many industries. Um, Now, being in this business for a long time, I'm sure you have learned some lessons. Maybe you made some mistakes, or you have observed other investors make some mistakes. Can you share with us, like, what are some of the most memorable lessons that you have learned during your career?
Well, because I was trained as a scientist, I'm so in love with technology. But I realized through a lot of experiences that it's never about the technology, it's never about the widgets, never about this product or service.
Hmm.
It's about the the team that
Yes.
can that the ability of the team to develop a business strategy to sell that product or service, the widget, out into the marketplace, and their talent and skills to be able to execute on that strategy.
Yeah, yeah, absolutely. I think this is one point that I wanted to bring it up earlier as well. Uh, Other than the entrepreneur and the alignment in vision and mission, yeah, I mean, team is very important. I think business is all about people. It doesn't matter what technology or industry are you in. So, what is your advice to entrepreneurs? How do they build their team? Like, at least initially, because as you said, so you are a fan of bootstrapping, and good people cost a lot of money. I mean, they have to pay their bills. So what have you seen work as entrepreneurs are building their company and they're assembling their first core team?
Yes, I find that if you're a solo entrepreneur, try to find someone who has skill sets that complement what you have. So together you're stronger. If you're
Mhm.
building a larger team, it doesn't it's not just the management team, but also surround yourself with people who know things that are different than you. I
Mhm.
when I was building my various angel investment funds, I surrounded with my my team with people that know a lot more than me, way smarter than me, and I'm
Mhm.
grateful for them to believe in the vision.
Yeah, I think that's a very important point. Like, as an entrepreneur, some people want to be the smartest person in the room, but I think uh, that's not a very good approach, right?
Well, I'll say that in my experience, I'm never the smartest person in the room,
Mhm.
and I'm grateful for people who want to share in my vision and
Yeah, yeah.
grow the business.
Absolutely, I completely agree with that. Now, one of the questions that I really like to ask is, who has played the most significant role in your life as a mentor, as a coach, to get you to this level of success?
I don't have a single person. I have multiple people.
Mhm.
I've been working in this area for a long time, a couple of decades at least. And as people come in and out of my life, they all impart some kind of lesson. And I'm
Mhm.
reminded of an old saying: people come into your life for a reason, a
Yeah, yeah.
season, or and a lifetime.
Yes,
So accept the people who come into your life. They all have something. They're in your life for something, and they'll
absolutely.
and
Absolutely.
you learn from every single experience.
Yeah, I completely agree. Well, thank you. This has been such an interesting conversation, very educational as well. Thank you for sharing your experience and wisdom. Now, before I let you go, if somebody wants to reach out, somebody wants to work with you, what is the best way to contact you?
They can reach me at my email, and it's thealzel@gmail.com. I guess I could put that into the chat function.
Yeah, and we'll add that in show notes as well. So thank you so much for your time and for being with us today. I hope we have many more insightful conversations with you in the future. Thank you so much.
Thank you, Manoj.
Thank
It's
you.
been fun.
Thank you.